Recording in progress. My name is Bobby Jones. Welcome, guys, to the meetup tonight. I'm glad to have all of you here. And so, like I said, what I like to do is go around the room and kind of have us all introduce ourselves. I'll start. My name is Bobby. I am a retired nurse anesthetist, and I am an apartment and alternative investor. And I really like that. I have not worked in anesthesia for a little over 2 years. And so I'm kind of a stay-at-home dad now. Yeah, it works out for me. And so I've got 3 kids, a beautiful, wonderful wife who puts up with me and my craziness. And I live in Winston-Salem, North Carolina. So let's see. George, do you want to kick it off?
Perfect. George Roberts. I've been in real estate for over a decade. I helped to found a residential construction company. I'm also in multifamily real estate, and I also syndicate commercial real estate. Great to meet all of you, and I have my contact info in the chat.
Very cool. Courtney, I'll let you go next.
Okay, I am Courtney. I am about a 60% locum nurse anesthetist at the time, which I'm hoping to reduce that over time. My first venture into real estate was purchasing the land that our freestanding ice and water vending machines rest on, which needed to be commercial property, which was interesting not knowing commercial property and then buying the land. Mm-hmm. So that was my first venture into, I would say, real estate other than my own personal home. And I do that adventure with my husband, Jeff. While I still work in anesthesia.
Hey, Jeff.
To be quite honest, I'm hoping to get out of the OR a little more in the future. So that's why I'm here.
Cool. Chelsea, would you like to go next?
Okay, I had to unmute.
Yeah.
All right. So yeah, I'm a CRNA. I'm doing a rural CH job share down in Texas right now. My favorite kind of anesthesia is actually plastics. I used to have a real estate license in Austin, so I have sold property. I ended up going to anesthesia school and I kind of let my license lapse. For fun on the side, I run a transformational hypnosis business where I help people lose weight, lose anxiety, insomnia, help define their business goals, really get clear on like where they're going, which is funny because now I'm like, I am sick of anesthesia and I'm only 2 years in.
Hey, that's okay though. I mean, you have the income now and you can possibly start segueing into some side careers as well. So,
yeah,
it sounds like you've already got a little bit of a path on the side. So that's awesome.
Mm-hmm.
So very cool. Allie, you're up next. If you don't mind unmuting and giving us a little bit of info on you.
So my name's Allie, like you said. I'm from Greensboro, North Carolina, and am a new CRNA. I've only been practicing since September and have been interested in real estate with my husband and actually one of our good friends. We went in and bought some apartments in Winston-Salem, and we were just actually gave a little bit of money. Like we're not actually having to deal with all the stuff, but just trying to learn more about it and would like to get more involved.
Yeah. And I think I can't remember if I reached out to you or if I was planning to and just haven't, but I was very interested to hear more about that story. So I definitely, would love to maybe dive into that a little bit, if you don't mind sharing in just a little bit, but we've got Jeanette here as well, who just joined us. And I'd love, Jeanette, if you wouldn't mind unmuting and giving us a little bit of info about you.
Hi, my name is Jeanette Lewis. I live in Loma Linda, California, which is about 50 miles east of Los Angeles. I have owned 2 long-term rentals for about 18 years in a it's in the same community as I work, which is where we have a major healthcare system and university here. So it's very easy to fill those rentals. I kind of just stopped investing because of debt to income ratios. And then all of a sudden I heard about short-term rentals. And so now I'm looking for a short-term rental either in the Smoky Mountains, Gulf Shores, Florida area, and open to other opportunities as well.
Very cool. Very cool. So the two properties that you have, are those in California or are they elsewhere?
No, they're in the same city I live in. They're in Loma
Oh,
Linda.
okay.
And I work for the health system here, Loma Linda University Health. And so a lot of my tenants, not all of them, but I frequently have medical students, pharmacy students, nursing students, that type of thing that rent from me. Right now I do have a family in my other property. But there's usually, my occupancy rate is usually very high. So my turnover usually is max like 2 weeks.
Okay.
Whenever there's turnover, it's only empty for about 2 weeks. And that's just because I'm painting and doing things in between. So they're excellent properties, but only in the state of California, I'd prefer to invest out of state. Taxes are high. The legal system is very biased towards tenants. And I don't know, just looking to explore opportunities in different states that maybe have more favorable laws.
Yeah, for sure. I think that's one of the key things when you're looking at investments is trying to find the things that are to your own advantage. And as a landlord, it's just more advantageous to have laws that are in your favor as opposed to in the resident's favor. So that's why you see a lot of people not wanting to invest in states like California or places like Chicago, things like that. So but yeah, I mean that's cool. And I know that the Southeast is, it's pretty booming right now. Southeast and the Sun Belt, and the Midwest as well. So pretty cool. Well, glad to have you
Yes.
here.
Thank you.
So but yeah, Allie, what size property did you guys get into here in Winston, and how in the world did that come about?
So yeah, my best friend from college, we went to UNC Greensboro together, and he got into real estate and was in Virginia, and then actually reached out to some friends looking at purchasing a property there. It was 40 units, and it was 48, sorry. And sorry, my husband's telling me because I don't really know all of it. I just helped fund it. So 48 units, and they're just turning them over and actually looking at refinancing and or adding on there, but we're still looking for other properties. But it's us and 7 other people that are in on it.
So then what is your role as part of the team?
Just we just provided money, and so we don't have as much in it as the two the college roommate and then his partner are doing the daily managing and have dealt with all of that. We just put money in and then paid back in 2 years, and then we'll still get 1% each month. Okay.
Very cool. So is this a long-term hold, or is it something you guys are looking to kind of offload in a few years and kind of turn into another larger property down the line?
I think that what they've discussed is more down in like a couple years to sell and then to turn it to more. But to be honest, I've been so consumed with school until recently that I've just said, keep me updated. And now that I have more time and then we'll have more of an income, would like to get more into it and understand it more, to be honest.
Very cool. Very cool. Yeah, it's definitely when you're going through school, finishing up boards, all that stuff, it's it's going to consume everything for you. Yes. So I'm glad for you that you were able to get into it at all while you were in school. Yeah. So there's something to be said for that. So but yeah, it's pretty cool. I've had so I mentioned that I started investing a little over 2 years ago. And I basically invested in 4 deals with cash out of my retirement account. So I took money out of my retirement accounts to create income on the side. And 2 of those deals that I invested in within the last 2 years are actually being sold this month. And so just what you're talking about. And I've actually 1031 them into future deals, but both of those deals, I think one of them came out at a 1.8 multiple, and the other one came out at right about a 2x multiple. And so it's pretty cool because it's still gonna, create that passive income. Now my income's gonna go up, and I didn't have to do anything for that, which is nice. So
Yeah, very nice.
but yeah. So George, you had a property that did you guys close on that one, or is it still waiting to be closed on? I thought you guys
Well, it
closed on
sounds
it.
like you're talking about the East Tennessee property. So that's
Yeah.
Jefferson City.
Yeah.
Closed down at the beginning of the month. Things are going really well. We got some interest in people paying vastly increased rent. We haven't even touched the place to speak of. But certainly we're ready to start making some great renovations. So I think this is one of those things where you just have an amazing backstory, right? I mean, you've got a total mom and pop shop where they're just not raising the rent for 3 years.
Yeah. Yeah. That's a big deal. And I mean, that's great for people that they had that opportunity to stay in a place like that. The flip side of that, I've got an aunt who has lived in an apartment for, going on nearly 20 years. And, she hasn't signed a lease in years, and the rents haven't been increased in many, many years. And she's on a fixed income. So she just got notified that their owners sold. And so what's going to happen is the new owners are going to come in and raise rents, because the rents are nowhere near where the market is at in the Tampa Bay area. So, she's actually having to look at, possibly moving and finding a different place to live. And so, that's the flip side, of some of this real estate stuff going on. Being in Asheville, I just saw front page of their paper. They said, rents have gone up in Asheville 36% in the last, since March of 2020. That's, stuff that I think is interesting to kind of keep an eye on, because that's obviously not going to be sustainable for the long term in many different markets, but real estate is local. So I'm curious to what any of you guys think about, what's going on with regards to that. Are wages increasing at the, anywhere near the pace that multifamily is? I don't think so. But I'd be curious to hear anybody's thoughts.
I was just going to say, I was born and raised in Asheville, and my family still lives there, and a lot of our friends, and the wages are not going up, and a lot of the locals are actually getting pushed out. And there's not a lot of jobs up that way either. So it's kind of crazy, and there's just continually booming of new apartments and housing going up.
Yeah. Yeah. Well, and their Airbnb laws are such that you can't have Airbnbs and stuff downtown, I don't believe either. They've got very strict laws about that.
Strict. You have to be, you can't rent out your whole house, and you actually have to occupy it as well. There's definitely ways to get around it. And the city council actually does not usually follow up. People just will get fined like $500. And a lot of these people are making more money on the Airbnbs than actually they don't care for those fines. They'll just pay them and continue to do them.
That's interesting. I didn't realize that. So
yeah, we had a neighbor that, a good friend, my mom's friend, and her neighbor has reported the people up the street multiple times. And he's actually on city council, not the one renting it out, but the one that keeps reporting it. And he even him being on city council, he said there's really, they're not concerned with that. These people keep paying the $500 fine, and these people continue to rent their Airbnb out.
Yeah. That's interesting.
Yeah. We have similar problems in Colorado too, as well.
Yeah.
Along that front.
One of my properties that sold was actually in Colorado Springs.
Yeah.
Yeah.
Yeah,
So.
we have similar. They have very unfavorable laws towards owners here.
It's a hot market.
Yeah.
If you invite someone into your home, a friend or relative, for 24 hours, they have squatters' rights. They never
Wow.
have to leave. And then
Well, that's interesting.
without a signed lease, you have to start a legal eviction process to get them out.
Holy smokes.
It is very unfavorable and becoming that way. Jeff and I straddle two worlds. We have a home here in Colorado Springs.
Yeah.
And we have a nice size home that's on the old side of town, fixer upper, that in the future we may want to rent out. But we also split our time in a mountain town. And the mountain towns are really struggling because of the short-term rentals, that locals can't find housing, like you mentioned, at a reasonable rate. And people are really getting pushed out of their communities. We have a business in the community, which somewhat makes you feel, for the people of your community that are struggling. You see it on both ends. And then people, buy up these, $250,000, $300,000 places and then do short-term rentals all, for 3 seasons out of 4, basically, because the winter is slower.
Well, and I think part of that too, the prices are going up in places. And so it's not, you don't make enough money just with a long-term rental by having a long-term renter. You have to almost be forced into some kind of an Airbnb situation to actually make the numbers work as an investor.
Yeah. And in our small town, they just, before the first of the year, they put a moratorium on water taps. So they have somebody with a whole subdivision of land and lots to sell, but there are 0 water taps.
Interesting.
So if you can't drill a well and you have to tap into city water, and city water has a moratorium until they figure out their water rights here in Colorado, your building is stalled. And in some ways they're trying to do that to conserve resources, but they're also driving up the demand of the people who have the resources.
Yeah.
We own a water machine, so that makes it good for us because we're already tapped into the water line, but we can see the struggles though.
Yeah. Wow.
Yeah.
It's, and it's amazing how much of this stuff is just, it really is down to local regulations and things like that. I mean, there's definitely a shortage of affordable housing in the country. And that's, until that's solved, like how, the multifamily space is still a great investment space to be in because you consistently have this supply and demand problem. So it's going to still be an appreciating asset and it'll keep up with inflation and it'll do all the things that it's projected to do. But yeah, when it comes to specific markets, like if we're talking about properties that we expect to be able to come in and really bump rents on, it's got to be like, George was talking about the mom and pop place that, they just haven't raised rents in a long time. So there's a lot more runway that you can play with. Because the properties are still going to sell for quite a bit because the people know the value of these properties. If you go into Tampa Bay, you're going to pay a lot for a property now, and versus rural Tennessee or Colorado or whatever. You want to be in some of these big cities because then that you're going to get that appreciation over time because there's this influx of a population, there's the jobs and all that stuff. So. And I think that's what makes Asheville in particular such an interesting case because it's not like there's a ton of jobs that are really driving people there. It's more of that retirement lifestyle, being in the mountains, the location being everything, and it being more of a tourism industry, which, some people want to be in and some people don't. But anyway, I'm kind of rambling. Anybody else want to jump in?
But then that community is 10 years behind Frisco, Colorado.
Yeah.
In which locals can't find housing and shops aren't open because people can't find housing because then they drive it all to the tourists.
Yeah.
And so then you're 10 years behind what like the mountains of Colorado are struggling with now.
Yeah.
So some towns like in Frisco, they're giving tax incentive to landlords to stop doing short-term rentals. So they're giving you property like 10, 20,000 a year off your property taxes just to be able to do long-term rentals. Because they want to stop that marketplace.
Yeah. Well, that's interesting. And
That's
that kind of, welcome, Christina.
Hey.
Jump in here, say hey, introduce yourself, all that good stuff. So,
Hi. This is really intriguing to me. Steph really wants to do short-term rentals, and they scare me. So this is all good to hear about.
Yeah. So, Christina, where are you located? And, what do you do? Not everybody knows you. I know you, but not everybody else knows you.
Yeah. George and I have been slowly connecting. We've been to some in-person meetups here too, but I'm in Michigan, and we just got the keys to our first flip on Monday. So I spent all day yesterday ripping out carpet and padding. And then as I ripped out carpet and padding, saw a lot of black rubber stuff underneath. I was like, pretty sure I'm surrounded by asbestos right now, and I should be really, really careful. So I got it tested today. It is, in fact. So now we're talking abatement and, all the things that are just going to increase our price of flips. But it's a learning experience and experiment. So, George earlier this week was talking about in-person meetup in Michigan, just outside of Detroit. And I was really hoping to go, and I literally had like carpet padding throughout my hair, and it just was not a good look for me. So
well, that's good they canceled, and I couldn't remember everybody I told about that. Yeah, so I got the message through Facebook. But come to mine, I never cancel mine. Rain or shine, we do it.
I was gonna say, where outside Detroit are you? I was born and raised in West Bloomfield.
Oh, really? Awesome. Yeah, not far from there. I grew up in Troy, Michigan, in Oakland County, but currently in Macomb, Michigan.
Okay. My parents have a place right on Walnut Lake there on Middle Belt Lone Pine between Middle Belt and Inkster. And my parents are, older. And my sister and I laughed that we're going to turn their house into a corporate rental.
That's amazing.
I love all these. Yeah, go ahead.
Yeah, we were actually looking at houses on Walnut Lake for our primary residence, and we found one. I'm sure, I don't know if you've been back recently, but in that subdivision, I think the south end of the lake, there's this bright blue A-frame house.
Yeah,
I can't think of what the street is.
Off Putnam. It's like off Putnam.
Is it Putnam? Was it Putnam stuff? I can't remember either, but yeah, I mean, you probably know better than we do because your parents live there. And it they didn't update the kitchen or the bathrooms, and we're like, we don't want to do those renovations, and it's not worth the price with not updated kitchen bathrooms. So we ended up walking away. And then there was another house on Langham that Steph was in love with. It was her dream house, and it went the day we saw it. Went like an hour after we saw it, all cash.
So my mother's friend, Cohen, who we know in our subdivision, just sold her house 600, not updated since the 80s when they purchased it, because my parents bought theirs in 77.
Yeah.
But lake access.
Yeah.
Plumbing needs to be done, 4-bedroom home, and she sold it in 3 hours because it's 600, but the whole thing is about 250, 300 put into it.
Oh my God.
Corner lot, but right there in the Walnut Lake subdivision, in 3 hours, the house sold.
That's amazing.
I
mean, we really wanted lake access.
And deal, which I think is all the marijuana money, because that's how they are legalizing it, which is what they did here in Colorado. I was going to make you feel a little better. Don't have lights on, but we tore up our house, which is first generation plaster.
Oh, yeah.
Very good.
This weekend. So somebody said, is there asbestos? And Jeff and I were like, oh, it's 1938. That was way before they had asbestos.
Nice. Very good.
Sounds like you lucked out. Yeah.
We're like, oh, it's plaster. There's no asbestos. I'll just put down my N95 and do this whole thing. So that's what we did for 2 days.
I
feel your pain.
So we found out that the tiles have 3% asbestos and the mastic has 2%. So at least it's not 10%.
Yeah, I guess so.
I did have a KN95 on during all of my rip out. But I didn't break any tiles, rip anything. I'm just now worried about the mastic. So either way, we're gonna just hire somebody because I don't want to.
Oh yeah.
Well, my
Um,
sister's husband, not husband, Josh is a contractor there and works on all the, so if you need help, let me know.
Oh, really?
Yeah.
But he works like in West Bloomfield, Birmingham.
He builds like, $1 to $5 million homes. He's not as rich as the homes that he builds, but he builds some pretty big homes out there.
Mhm.
Yeah. Actually, the reason I'm late is because we were on the phone with a contractor.
Yeah.
And so we're figuring it all out.
I hear you.
Yeah.
Hey,
Exciting.
yeah,
Yeah.
it's all part of the process for sure.
Yeah.
So, and
So
I've got those Michigan ties too. I think, I told you this, Christina, but all my wife's family's from Michigan. We were up there for 3 weeks in the summertime, and they're all Michigan State grads, and so it's a big Spartan family. So I know, George, I know.
Ooh,
It's
I say Michigan State. It's like pork, the other white meat.
hey, speaking of which, their family, they were pork farmers. They were pig farmers.
There explains it. We're Wolverines here, so
Yeah. Hey, it's okay.
it's all good.
So, but speaking of, you guys mentioned corporate rentals. And so I put in a link in the chat to the interview I had with Al Williamson. He is known as leading landlord or the landlord scientist, but he is a guy who talks about rental arbitrage and a lot about corporate rentals. And Chelsea, this is kind of what we were talking about earlier. So this is the link that I wanted to get to you. But basically, when you're doing corporate rentals, you can avoid a lot of the Airbnb stuff because you're doing 30-day plus rentals. So, you avoid all those Airbnb laws because you're basically just doing a month-to-month rental. And those don't fall under Airbnb laws. So you can avoid a lot of that. You can still charge certain premiums to have people, and you can also market to a lot of different customers. A lot of people kind of think about travel nurses, but and of course, if you're in a healthcare, a big healthcare community, that's great. But there's, if you're having construction on the interstate, there's plenty of construction guys that need places to stay for 9 months at a time or something. And there are families that are displaced from fire or whatever. So you can have, insurance rentals and stuff like that. All kinds of things. If you have a major university, you can have visiting professors who come to teach classes for a semester. So they're there for 3 months. So any number of things like that can work out to your advantage, and you don't have to dress it up like a vacation rental, and you don't have to provide all of these things to do and things to see. You don't have to be in this hot market. Basically, if you have an extended stay rental hotel in your area, then you're good to go. That the market is there for your corporate rental. So just something to throw out there for those of you thinking about Airbnbs and corporate rentals. That's a really great information, and you can check out his website too. Those are in the show notes. But
thanks. That sounds great.
Yeah, it was fun. I've had, it was one of those things. I was going to possibly get into corporate rentals myself and do the rental arbitrage. And I was looking at it in January of 2020. And then I decided, I'm not going to do that yet. I'm going to go this route. And so I started my company and started building this up. And then a few months later, COVID hit, and I was like, oh man, I'm glad I didn't, try to get into that right then. But the thing is, in talking with Al, he's like, I didn't really take a hit with my rentals. He's got like 30 of them or something. And he's like, people still had to go places and do things. And people were still utilizing the corporate rentals, and they were able to kind of stay in one place with all the Zoom meetings and everything else taking place. Some jobs still require you to be on site. If you're in construction, construction jobs didn't stop working. So he just had to rethink his strategy of who he was contacting during COVID for those rentals. So anyway, something to chew on. But yeah, so let's see. So what do you, the other thing I was going to ask you guys about, because we were talking a little bit about multifamily and what's kind of coming down the pipe with some of the rental increases that we've seen. Where do you guys see multifamily going in the next 5 or 10 years? And what are some alternatives to multifamily investments that you guys see being just as profitable, if not more, in the next 10 years?
I think number one is the fact that we're millions of units behind in terms of construction. So I see a long runway. We still have a long runway to go in multifamily, but cap rates are getting compressed. So what we're going to have to see is that most of those increases are going to come from rent increases. As for what might be equally profitable, well, at some point might be good to pivot into triple net because there are a lot of amazing things you can do in triple net. I mean, if you can find the value add opportunities, maybe if you can construct an out parcel or something like that, great way to drive some NOI. But anyway, I think that it's blue skies ahead.
Mm-hmm. So I'd love to. So yeah, triple net is something that I need to learn more about. I don't know enough about it. I tend to think of retail when I think of triple net, but I know that's not all that it is. What information would you have, George, possibly about that kind of stuff, if any? Have you gotten into that at all?
I haven't, but I'll tell you what, a great thing you can do, maybe you can come to our next CRE Pro night. Dan Lukowitz is a major, well-renowned triple net broker, and he always puts on a great show. But it's a lot more than just retail because a lot of your one-off fast foods, restaurants, even some industrial could be triple net, but there's definitely some opportunities there. I love the cap rates and just love the idea that there are people out there that are willing to pay pretty nicely for those bond-like returns.
My concern is just what we're seeing here, in which with multi-units, they're pushing affordable housing. They're requiring something crazy, which I think it is 3 to 4 times salary on rent here in Colorado Springs. People have to show 3 times, that people are bringing in, I guess, 3 times whatever their rent value is to secure housing. And so the cities themselves are starting to put sort of a cap on how high rent can go. Mm-hmm. And especially in the multi-unit space. I'm not sure how many units, but like just down the road from us, there may be building, I mean, it's a small multi-unit, mm-hmm. but they're pushing affordable housing.
Yeah.
So, I mean, the cities are stepping in to sort of cap that.
Well, and I wonder if cities or states are going to step in and provide more financial incentives to create affordable housing. Because right now there are the opportunity zones that we're certainly, that can be pretty profitable for people. But what we're seeing is that the areas just outside of the opportunity zones are really growing as well. And so investors are actually wanting to invest in those areas outside of the opportunity zones instead, because they're a little bit of a safer investment and they don't feel like it's tied up for so long. With the opportunity zones, I think you have to have your money tied up for a while to really take advantage of it. But I wonder if there will be some financial incentives to really increase the amount of affordable housing that's being created, not just in cities, but suburbs and everywhere else. Because right now what you're seeing is the profits, it doesn't make sense to put in this new building and then charge affordable, I mean, that sounds bad, but what would be termed affordable housing rates in a class B or C. It makes more sense to build a new apartment building and be class A. And that way you can charge for extra amenities that don't cost a ton more to put in, but you got a new building, brand new amenities, everything else. And people want to move there and pay, and they're willing to pay more for it. So I do wonder what's going to happen with that, because, I live in a house that was built in the 1970s. Courtney, you said yours is in 1930s?
1938.
Yeah. I mean, I love that, but
I love it too.
Houses weren't made to last 100 years, so at some point, like we got to start thinking about.
My husband will argue. our house was built very well. We have original 2x4s that are 2x4s.
Yeah.
So it is built, nothing is 16 on center.
Yeah.
We have a little bit here in Colorado Springs, you have unstable foundations because Pikes Peak has actually grown. So the soil has shifted. We purchased our house in a neighborhood that actually rents well because they're small, single, individual family, not very large. It's close enough to downtown and highway access. So we're in a kind of, I want to say, mixed owner renter sort of neighborhood. And we know that when we purchased our house. So we kind of bought it for that reason.
Yeah.
But we also had a foundation that one of the walls was a 12-degree shift inward. So we had to first stabilize the house and fix the foundation before doing the insides. So it's
labor of love.
Yeah, I mean, but 3 years ago it was a tight housing market.
Yeah.
So you took the house that you could and knew that you'd fix it up. But we're fixing up the inside knowing that it might be a rental, it's not our forever home, but it might be a rental someday.
That's cool. That's cool.
Yeah.
Well, and speaking of which, so like there's a lot going on in the build to rent sector right now, where it is very profitable to, buy a piece of property and start putting single family or, duplexes and things like that on it and build to rent, because you can make money as you're going along and, as you're selling the properties and things like that. So it's becoming more profitable to go into development. And part of that is because some of the multifamily is getting more compressed. And so it's becoming more of an equal opportunity to go into that build to rent space. So are you guys seeing more neighborhoods pop up, more housing in your areas?
We are. I mean, we're at the base of Pikes Peak, so the only way to go is east. The problem is the cities haven't developed roads east to get back to the main interstate. So when you look at functionality, there's a lot of land between, Colorado Springs and Kansas. There's a lot of plains to build on. The question is, how far do people want to push it? And land that 3 years ago we thought would be nothing are completely developed when you fly over. So I do think there's a lot of potential here when you get outside of Colorado Springs and you go east.
Yeah.
There is a lot of land opportunity. But yeah, like I said, and it's not, the interesting thing is it's not multi-family. They're all individual homes.
Yeah.
But it's all east.
Yeah. Jeanette, how about in California? Are you guys seeing a lot of building in your area? I know I'm calling on people. It's not fair. It's just not fair. You got your screens off and you're muted. It's not fair.
Where I live, there's hardly any land. We used to have some orange groves and those are pretty much gone. We do have some new housing developments, but most of them are starting off at, I would say, mid 500 and higher. So not a lot of affordable housing, which it depends upon the city here. So where I live and one city next door, it's definitely not known as affordable housing. You have to drive out a little ways in order to find housing that is less expensive. But my dad's a real estate broker and he's doing a favor for someone. There's a place, I don't know. It's so far away. It's about 70 some miles away. It's out in the middle of nowhere. And the house is going to list for like $500,000. And there's nothing around. I'm like, how are you going to sell this house? Like, who's going to move there? But it's worth more than $500,000. So the prices in California are just, or at least this area of California, are just astronomical.
Yeah. Well, I do think, new construction now is really able to command a pretty high price, depending on where you're at, of course. But we've seen in this area, new homes going up in this area. It's not uncommon to see neighborhoods where it's $300,000 to $400,000 homes that are going up.
I was going to say, Christina, where you are, the demand is the lakes. I mean, always will be. The demand is around all the lakes.
Mm-hmm.
So it's hard
Yeah.
to build new housing. What my parents built in the 70s and 80s, because they built all around the water.
Right. Yeah, I don't think there's really any plots of land that I've seen. And we looked over this entire region when we were looking
Yeah.
for our primary residence, that had lake lots or anything like that to buy.
It was interesting when I went out last year to the Outer Banks, and we were in the Kitty Hawk area and stuff like that, and you know, and up around Corolla where they have the wild horses. And when you drive into that town, like the town of Corolla, it is money right there. It is all being blown up and built up, and I can't, you know, the prices of homes there are millions of dollars. But then you go back down to Kitty Hawk and you see some of these properties. Now they're worth a heck of a lot, but a lot of them are in shoddy, you know, condition, and they've been owned by generations of families that are just not giving them up. And there's this prime real estate on the Outer Banks, but it's kind of that, you know, the you know, what do you call it? Like the old guys club or whatever, you know, where these people just happened to buy this property 50 years ago when it was dirt cheap and nobody wanted to be out there. And now they've got a home out on the beach and they don't want to give it up because it's their vacation home, you know, even though when somebody would buy that property, they just knock the home down and put up something, you know, bigger and better and charge, you know, $1 million for it.
So fascinatingly, Jeff, when I met him, he owns 5 acres in Colorado where he has a cabin, and the area is called Colorado Florida Acres because Colorado wasn't developed. And if you bought land in Florida, they gave you land in Colorado because they wanted somebody to pay the taxes on this vacant land.
And
wow.
And so his acreage is in this small area, which is still very rural, trust me.
Mm-hmm.
But it's interesting. It was an offset of developing Florida. They developed Colorado.
That's really fascinating.
Yeah.
I mean, growing up, I remember, you know, in the late 60s and 70s.
He's here, I swear.
I'm here.
I kept seeing his hand.
He's here.
Where, you know, you couldn't give property away that was on the beach in Florida where I grew up, outside of Jacksonville Beach.
Oh, yeah.
You know, nobody wanted it. It was like, oh my God, what are you going to do with this? We can't give it away.
Mm-hmm.
You know, and 10 years later, people were building quarter-acre size parcels of land. They were building 3-story houses damn near to the berm, which is where the water and the sand kind of meet.
Mm-hmm.
And it's multi-million-dollar just for a slab or a slice,
Mm-hmm.
you know.
Offset, his mother owns a double acre, 200 yards off the coast in Jacksonville Beach in an old
That's
cinder
nice.
block hut that is literally
Yeah.
hurricane proof.
Literally.
Wow. Yeah, that's
And
my brother got married in Jacksonville a couple years ago, and I was shocked at how underdeveloped it is because, again, of the local government saying, no, we don't want these huge high rises, these huge hotels and stuff. We want to keep it kind of, you know, more mom and pop in that area.
Yeah, I think you're right on the money there. I think a lot of the people say that they want affordable housing. Nobody says they don't want it, but nobody wants a trailer park. Nobody seems to want an apartment next to the homes. And if you look at, I mean, you said that construction went on through coronavirus. Well, it didn't in Michigan. So, I would point to a lot of things that the government's been doing to make housing less affordable.
Mm-hmm.
And if you look at the cost of the regulations, it's not just the regulations themselves directly, but it's the delays that are imposed. I mean, there's indirect costs with that. And what it really does is it makes all real estate more expensive. And people say, you know, hey, we need to build affordable housing, maybe so, but if we could build more units, you wouldn't see housing inflation far outstripping the consumer price index.
Mhm.
Yeah, I agree. Here in Colorado Springs, the local residents are fighting it on wildfire evacuation. They want to tear down by the VA here and build multi-units. And I mean, the locals are fighting it. They built their homes in the mountains and they don't want it nearby. So they're trying to fight it with the fire chief on wildfire. And in the Green Mountain Falls between Springs and Woodland Park, they wanted to build a tiny house community and they're fighting it on septic.
It's
Yep.
the NIMBYs, the not in my backyard.
They're fighting,
It's-
and I watch it online, and I really believe. I mean, I found like a lot of land. It was about like $500,000, and I thought if you could put a tiny house community there, it would have been
A boom.
a
Mhm.
boom.
Yeah.
Hmm.
I mean, it's 15 minutes from Fort Carson. It could have been, if you could put the infrastructure in place and they would have
Yeah.
let you, it would have been a boom for a tiny house. In El Paso County, we are actually, tiny houses are legal in certain zoning,
Sure.
which is east kind of,
Mhm,
but unfortunately you have high winds. But tiny house communities have sort of, I think that's the wave.
Yeah. Yeah.
I'm a tiny house community person.
Cool.
Yeah.
I
No,
think
that's
that's
awesome.
the wave of the future.
Well,
And
I
I'd
mean,
like-
aesthetically,
yeah.
it's not like a mobile home park, and
No,
you can get
It's not a
it to
trailer
be
park. No.
mhm,
a little more attractive aesthetically.
yeah.
Yeah, I'd like
I
to see
think
more
that's
people be able to afford a home. So, I mean, I'd love to see some regulations relaxed,
Hmm. Yeah.
build some more. I'll tell you how the people come out with the pitchforks. I mean, even when you build something attractive, they came out and just basically slandered us out in Oakland County. So I'm telling you, it's people don't like change.
Yeah.
at
Well, again,
all.
it's we can talk about the affordable housing and how everybody wants more of that, but again, it's the local community and how they react to that level of change, how they embrace it or don't, and that's where the real difference is. And that's where in multifamily, I feel like you have to have boots on the ground. You have to understand the market that you're investing in, and that makes a big difference. Your operators need to know what they're doing in the places that they're going into to do the work. And so you want people that have that track record, and they have the people that are, there in the area that know what they're doing. Because it's very easy to see numbers on a paper and say, yeah, that looks like a great deal. But I mean, how realistic are those numbers given the area that you're investing in? And so, I do like investing all over the country personally, and I like diversifying my portfolio that way, but I want to invest with people who know what they're doing in the specific markets that they're in. So anyway, well, I do see that it is 9:01. Does anybody have any burning desires that they want to bring up? Any questions that they had that we didn't actually go over? Because there weren't a whole lot of questions, but just a lot of discussion tonight. But any questions from anybody before we let everybody have their evening? Okay, well, we're going to say that's a no. So guys, it has been great having you, and really cool discussion tonight. Thank you everybody for being here, and we'll have this again next month. The link is in the chat if you want to get a hold of me, if you want to check out the meetup page and hear about our next meetup that'll be next month. These are the last Wednesday of the month. And but it's been a pleasure getting to know everybody and chatting with all you guys. Thank you so much for joining me for another episode of the Plan B CRNA podcast. If you haven't already subscribed and reviewed the show, I'd be honored if you took the extra time. It really helps to expand our reach and get the word out about the show. If you're a CRNA who is interested in sharing your story on our podcast, I'd love to have you. Please email me at bobby@oncallinvestments.com for more information. This episode was brought to you by On Call Capital. They are dedicated to helping providers like you develop passive income and generational wealth through investments in the apartment and alternative investment spaces. feel free to check out their website at www.oncallinvestments.com and subscribe to their free educational email series. You can find On Call Capital on Facebook, Instagram, and Twitter. You can also check out our YouTube page, where you'll find all of the show episodes along with other educational videos. Thanks for listening, and we'll see you on the next episode.